One of the most powerful shadow men in the world has just come out and said the whole world is going to tokenize with crypto. This powerful shadow man I'm talking about is none other than Larry Fink, who's an American billionaire businessman. He is the chairman and CEO of BlackRock, which is an American multinational investment management corporation. BlackRock is the largest money management firm in the world with more than 10 trillion in assets under management, giving the firm enormous power over the global financial system. And the CEO is bullish. This might gain even more attention now because the current monthly candle is green. Price moves first, the narrative attaches later.
This is one of the reasons why I'm focusing on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we could identify immediately who is the beneficial owner. And this is why we're working on it. And every beneficial owner, from an individual to an institution, have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort.
If you are an investor, you need to pay attention to what Larry Fink says next. He continues giving his broader outlook on 2023. This year is enormously optimistic for investors. Listen to Larry Fink's reasoning why. Pay attention to what he says at the end.
You talk about 2022 being a year of huge transition. How do you see this year shaping up, Larry? More of the same, or, are your expectations perhaps a bit different than what we've seen last year?
Well, from the perspective of long-term investors, I see 2023 to be enormously opportunistic. Actually, maybe the hardest years for investing for the long term were the last few years because of negative interest rates. Investors worldwide had to take on more and more risk to achieve their liabilities. Actually, now having 2-year treasuries going to be close, at 4.25, credits at 5, high yield at 8%. We're going to see a whole restructuring and a rebalancing of how portfolios were constructed just a few years ago. And you're going to see now, once again, more bond investing within the confines of pension fund investing. In 20 years ago, most pension funds had 60-70% in bonds because they were able to achieve their role and their goals that they were trying to achieve. By 2018, they could not own bonds. They had to put on more and more illiquidity. And so in reality, we're going to be seeing more and more opportunities of rebalancing back into bonds. And as you talk about a lot about growth equity, when interest rates are near zero, you have the ability to buy high growth stocks because you're not losing any money. If short rates go up to 5%, you're paying a big premium for that type of perceived growth. And that's a recalibration that we saw in 2022. And now we're living in an area where you're going to be able to invest differently. In addition, we are seeing more and more investors looking at infrastructure, where you're going to have a combination of some illiquidity, but you're going to have high coupon. I think this is going to be a period of time with more dividend stocks again as a play. So I look at this as more opportunistic, and probably the most important thing of our announcement today in terms of earnings has been BlackRock is winning more share of wallet than any firm in the world. In good markets when markets are going down, or in bad markets, good markets when markets are going up and bad markets are going down. This past year, we had $400 billion of net inflows in long-term assets, of which $230 billion came from the United States. And so we have now raised about $1.7 trillion over the last few years from investors awarding us in good times and bad times because of the guidance we're giving and also our performance and our fiduciary standard.
By the way, welcome back to Altcoin Daily. Subscribe to the channel because every day we take you through the charts, the different coins. We keep you in tune and up to date and well informed on the entire crypto ecosystem. Let's jump in. Bitcoin yearly candles. Green, 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 red. Green, 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 red. Green, 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 red. Green, green, green. 2 more years of green is what the chart suggests. Of course, past performance doesn't necessarily indicate future results, but so many things are lining up. Bitcoin 8 years ago, Bitcoin 4 years ago, Bitcoin today. The Bitcoin narratives change, but the patterns remain the same. So 8 years ago, notice this point right here, trend change. 4 years ago, notice this point right here, trend change. Now today, very interesting. Very interesting. So going out on a limb here, Bitcoin's bottom is in. Even if it wicks just a hair lower, Bitcoin's bottom is essentially in. That's what I think. Of course, you tell me, anything could happen. But if the 4-year cycle low is in and we have 2 more years of green, as I believe, it's very hard to miss just how well Ethereum performed. Relatively speaking, Ethereum is holding up so well in this bear market, as we've noticed, as cycle trader Bob Lucas has noticed. As it gets asked often, my long-term hodls, the coins I'm holding for the long term, 50% Bitcoin, 50% ETH, according to Bob Lucas. You tell me how you allocate Bitcoin and ETH specifically in the comments below. And it's true. ETH's risk profile drastically evolved since 2018, so much better than that previous cycle. Though there remains implementation and roadmap risks for Ethereum, it's clear that the market is saying it trusts the process, and many now own it as a store of value. Use in NFT transactions likely bolstered this appeal, plus staking income. Yes, Bitcoin's value proposition was simple and clear from day one. ETH's required execution proof, moved to staking, big deal, but also getting withdrawals on the roadmap, key. Real utility finally validates thesis for the chain, significant capital sitting on chain, plus time. People are starting to understand, education is starting to happen. In fact, one of the largest US colleges has begun teaching students about Bitcoin. The professor said a programming Bitcoin course will follow the first Bitcoin course, where students will learn how to build a Bitcoin library from scratch. What is this large U.S. college we're talking about? Texas A&M. Classroom adoption of Bitcoin and crypto courses continue to skyrocket, with Texas A&M now being the latest United States college to offer Bitcoin course to some of its 74,000 plus students. Makes sense, right? On a state level, Texas, very bullish on Bitcoin and crypto adoption. I love seeing things like this from specific regions in the USA or specific countries, just seeing the different types of people adopting Bitcoin and crypto. Breaking news, former leader of Texas Energy Grid, Brad Jones, says Bitcoin mining is helping balance our grid and is driving more renewables into our system. Love to hear people talking about Bitcoin like this.
So for many years, ERCOT had been looking for loads of scale that could really respond in a demand responsive way that could help us balance our grid. Back in 2015, you may remember we started the process of setting up loads in SCED. It was through, I think, about 2016 or 2017. No one showed up at first. There just wasn't any loads of scale that could really help us in that market. But it's here now, and it's a great thing for helping us to balance the grid, helping us to manage all of our resources. The Bitcoin has the nature of really turning down when prices begin to rise in a way that we can give that power back to other consumers. And at the same time, as we bring more and more renewables into the state, it becomes a driver of more renewables. Because right now, if we bring in all the renewables that are signed up to want to come to our state, there will be a significant depression of pricing during the day. By having Bitcoin there to assist and to stabilize those prices throughout the day, it's going to drive more renewables into our system, and that's good for Texas.
Get your tickets to Bitcoin 2023 Miami, May 18th through 20th, Miami Beach this year. Use code Altcoin Daily, 10% off. This is the biggest Bitcoin conference of the year. Ticket prices continue to increase as we get closer to the event. Use code Altcoin Daily, 10% off. Get your tickets now. Make sure you subscribe to our channel. We keep you informed on a daily basis, and we try and share with you the good news, the bad news, the whole news. And the whole news is this: the Reserve Bank of India, their governor, calls for an outright crypto ban. India is worried, quote, they will lose control over the money supply in the country due to assets like Bitcoin. This can happen, the central bank governor warns.
Cryptocurrencies have the potential they have the characteristics of becoming a means of exchange. That is, they can become a means of exchange of doing a transaction. And most of it is dollar denominated. So if you allow it to grow, assume a situation where 20% of our transactions in the economy, 20% I'm mentioning an ad hoc number, 20% of the transactions in the economy is taking place through cryptos which are not issued by the central bank. It is issued by private companies which are placed all over the world. The Reserve Bank, being the monetary authority of the country as the central bank, will lose control over the money supply in the economy. We will lose control over 20% of the transactions in our economy. Reserve Bank's ability, the central bank's ability to decide monetary policy, to decide on the liquidity of, the level of liquidity that needs to be maintained, the level of money supply, M3, that has to be maintained in the economy, the Reserve Bank's authority to that extent will get undermined. It will lead to a dollarization of the economy. And please believe me, these are not empty alarm signals or empty, this can happen. 1 year ago, in the Reserve Bank, we had said that this whole thing is likely to collapse sooner than later. And if you see the developments over the last 1 year, climaxing in the FTX episode, I think I don't need